Welcome to the Flow Tracy Money Audio Commentary. This is Owen Tracy recording, and it is 3:40 p.m. that is Central Time. Today is December 3rd. I think the primary economic indicator that came out today was the ADP National Employment Report, and it was negative. And I think you can see that there's quite clearly a downward bias since the end of last year. So back then it was over 200,000, and since June we've had three negative readings. So that's private employment, and ADP is one of the biggest payroll managers in the country. So that's a reasonable measure of private employment. Of course, you're going to have the broad measures that are produced by the government because they have a bigger picture and are generally considered to be more accurate. But the ADP, being a private measure, is at least independent from political bias, which is something that the official statistics are often accused of. But what this also means is that it's more likely than not that the Federal Reserve will go ahead and cut interest rates in December. So we had a reasonably strong environment on Wall Street. The Dow Jones Industrials in particular was in positive territory. The future was up over 1%. And then the nominal was up 0.86%. And it was a reasonably steady day on the Nasdaq Composite. It was pretty much unchanged. Some of the bigger movers in Asia this morning were the Nikkei. It was up over 1% and still hovering around the 50,000 level as the yen touches the region of its lows over the last several years. The Hang Seng was down about 1.25%, and the mainland market was down 0.5%. So, still a lot of uncertainty in China, and the repercussions of this incredible tragedy in the fires of social housing in Hong Kong. That's going to have political repercussions. It's unlikely to change anything, but there's certainly going to be a lot of ticked off people. Then I think one of the other important points that we've had today is that precious metals remain quite firm. Silver continued to push on and I think closed at a new high. Oil prices were a tad firmer, but primarily that was because of the rolling back of some of the emissions uh, targets that the Biden administration had imposed. And then there are additional efforts to remove some of the uh, the anti-emissions and more efficiency requirements that are being put on